All right, welcome everybody. Actually, we have a little bit of a pivot today. We teed up. We have with us today Ryan Beatty from 1031Smart. We appreciate Ryan coming. We teed this up as a deal webinar, but actually he's going to be doing a lunch and learn today because he's focusing on a different asset class than what we've had presented to the group before. So we're going to do a lunch and learn, and then we hope to get him back next week to talk about the specific deal he has open. So we're going to get a double dip of Ryan here the next week or so, which would be great. But Ryan, I'm going to turn it over to you. Thank you for being here, and we look forward to learning something about the retirement home living.
Awesome. Thanks so much, Chad. Before we get started, my company's name is 1031Smart, and there's a little bit of a story there. And that story is that when I started this company, my whole vision was just going to be, I'm going to help people with 1031 exchanges, because that's one of the things that I had done in a past life that I really enjoyed. And so I started the company 1031Smart, which I thought was a really catchy name. And then I realized, well, I like raising money for the deals too, not outside of 1031 exchanges. But I had already kind of committed to the name. And so I'm like weighing back and forth. Should I change the name? People already know it. Does it matter? Anyway, I accept 1031 exchange funds, but also non-1031 exchange funds.
There you go. Thanks for the clarification. I guess I will say too, as you're jumping in, for anybody that does have questions along the way, also feel free to dump them in the Q&A. I forgot to mention that. So, but with that, Ryan, again, thank you for being here and take it away.
Yeah, thanks for having me. Is my screen sharing?
Yep.
Perfect. Okay. So today we're going to be talking about senior living investing. And the reason that we thought it would be a good idea to do a webinar on this before talking about a specific deal is because people are very familiar with things like multifamily and self-storage and maybe office and retail and industrial and things like that. But there's not a lot of opportunities to invest in assisted living, memory care, just generally speaking, senior living. And so there are some nuances and differences between all the different asset classes. And so I thought it'd be a good idea just to give an overview of what investing in assisted living looks like before actually getting into a deal itself. All right, so we're going to go over some introductions. We're going to talk about why senior living is an interesting investment that you should consider. We'll talk about what is senior living, and then we'll talk about the different ways that you can invest in senior living. All right, so that's me. My name is Ryan Beatty. I've been in the commercial real estate and private equity space for about the last 4 years now. I mean, my experience ranges from things like I mentioned, multifamily to self-storage to assisted living, obviously, Bitcoin mining, oil and mineral rights, oil drilling, so a wide array of things. And when I went out on my own, one of the main reasons I did that is because I didn't like working for a company who would say, you have to raise for this now. You have to raise money for this now. You have to raise money for this now, regardless of whether or not I was comfortable with the investment, the asset class, whether I understood it very well. And so when I went out on my own, I didn't want to go out and work for another company. I wanted to work for myself and pick the investments that I understood with the operators that I had a track record with. And that I felt comfortable recommending to people, because I didn't want to feel like a salesperson in this, because this is, you know, a whole other level of responsibility when you're talking about investments. So lately I've focused more in on assisted living and memory care and things like that. I also did some self-storage earlier in the year, but I'm mostly focused on things that I think are really well positioned to weather this challenging storm, kind of like that we're stuck in right now and that we might be stuck in for the foreseeable future. I hear multifamily operators say things like stay alive till 25. And my feeling is that when you say stay alive till 25, that's probably like a catchy line, but realistically, the timeline's a little bit longer than that. So what do you do until you are done staying alive? And so I think assisted living is really well positioned to be that thing. So as I mentioned earlier, I allow people to invest with 1031 exchange funds. I allow people to invest with regular capital, and then obviously like self-directed IRAs, solo 401ks, things like that. And then personally, my wife and I live out here in Calabasas, California. We've got 3 kids, 7, 3, and 1. And originally from Central Ohio. I was talking with Chad earlier that I'm from kind of the similar area from him. All right, so here's an example of some of the projects that I've done in the past. So here on the left, this one's from Merritt Island, Florida. It's a project that I actually went to visit about 2 weeks ago now. It was a deal that I raised for on the construction side of things. And so now it's opened, it's nearing stabilized, and it's in the process of going through a refi and returning investors' initial capital. And then up here on the right, we've got a property in Bedford, Michigan. And that was an investment that I did that was already in the stabilized side of it. So we'll talk about it later, but there's two different types of investments that I typically do. One's in ground up construction, one's in just acquiring a percentage of a cash flowing property. And then down here on the right is my partner on the assisted living side. His name's Shahid Imran. He owns two companies, Build Senior Living and Hampton Manor. And Build Senior Living obviously builds senior living, and Hampton Manor is his operating arm. And so he's been doing this for 13 years now. And so he's got an amazing track record. And I feel really lucky to partner with somebody like this, because as we'll talk about later on, this is a very operationally heavy asset class. This isn't like hiring a property manager and being kind of hands off. This isn't self-storage where you've got, one employee. This is a very, very demanding operationally wise job. And it's actually a concern that I have that we can get into later on the operations side, as I'm seeing a lot of multifamily operators pivot into this assisted living space because they see the opportunity, but perhaps they don't realize what they're getting into. All right, so why senior living? This section is going to be short and sweet. In case you haven't heard this phrase before, you'll probably be interested to hear this phrase, the silver tsunami. The silver tsunami is here. The baby boomers are reaching retirement age. The oldest baby boomer is now 77 years old. We're seeing 4,000 people turn 85 years old every single day, and 10,000 turning 65 every single day. So those are obviously really important metrics in this assisted living space, because once you turn like 75-ish, you start getting into this, independent living, assisted living kind of space before you age into the other needs. And then I think this other number here down here in the middle is really important as well. The average baby boomer net worth is $1.2 million. And I was actually just reading a couple articles about how the baby boomers aging out, because they have acquired most of the wealth in the country, is going to eventually be a boom to the economy, because they're going to be spending that as they age. And so this net worth is really important in the assisted living space, because as we'll get into a little bit later, it's not cheap living in these communities, but it is a need. It's not a want, it's a need. These things are a need. And when we typically build in these communities, local authorities, local municipalities are asking us to consider building there. And then this last piece, which is just, further adding some context into how America is aging. 20% of the population is going to be 65 and over by the year 2050. And so I think there's this, as I talk to investors, I've got a pretty large group of investors that I speak to. There's this common misconception that, well, people are aging right now, but this is not going to be a trend that lasts for that long. When in fact, this silver tsunami is not expected to really crest until 2055. So we've got a very, very long runway here in terms of the continued aging of America. All right, so what is senior living? So my background before I started raising money for these various types of investments, one of the things that I did before was work in the home care space. So I would work with the elderly and the developmentally disabled, and I would send caregivers out to them, whether it was at their homes, whether I was at independent living, whether it was maybe at an assisted living community. So I was very familiar with all these different levels, and I could walk into some place and say, this feels different. This, there's not that much care going on here, or wow, there's nurses everywhere. And so once I started to do research, you realize that you hear assisted living, or you hear senior living, and it's just kind of used very broadly to cover a lot of different asset classes. And so what we see here, there's things like retirement communities, which is where my grandma lives, at a retirement community in Florida. There's not really any care. You have to be a certain age to live there, and that's about it. And then there's independent living, and what you see there is still not that much care, but there's things like meal preparation and activities if they want to, but really they kind of live by themselves. In some of the communities that we build, we actually build independent living units on the outside of the community, so people can come and have dinner or have lunch if they would like to, but then just kind of live separately. As you get into assisted living, you've got a little bit more care, you've got more activities, you've got more assistance, and we'll get into what that looks like. And then as you go down the spectrum here to memory care, obviously, if you have dementia and things like that, that's a very specialized level of care. And then skilled nursing is actually what got hit hardest during COVID. This is where you're getting nurse assistants 24/7. Unfortunately, COVID was really hard on these skilled nursing facilities. And it kind of gave a bad name to the assisted living and independent living space in the process. All right, so I talked earlier about why this high net worth in the baby boomers is really important. And this is the reason why. This is the average rent by senior living class. And keep in mind that there's a wide range of communities. There's older communities that charge very little. And then there's brand new communities like out here in California that are charging like $12,000 a month for independent living. But the averages nationwide are just under $4,000 for independent living, a little over $4,000 for assisted living, memory care, you're around $7,000, and then skilled nursing, the average is around $8,000. And that's every single month. And that's just to live there. Then you start adding in different services, different levels of care. And these are all, it's like kind of like an a la carte menu where you can add on these additional levels of care as needed. And so it's not uncommon to see assisted living rents at our communities coming in at $6,000, coming in at like $4,500 to $5,000 a month. But after you add in all these different services, they're up at like $6,500, $7,500 a month. So my focus, I talked about all the different levels of care that there are out there. My focus is on assisted living, independent living, assisted living, and memory care. And I think this is a nice space to play in because you're avoiding the skilled nursing, because skilled nursing, there's a lot of liabilities there when you're actually doing medical care. And then also, the COVID was really hard on skilled nursing. Here we have independent living in our communities. A lot of times, like I said, we have independent living, we have assisted living, we have memory care. So this nice kind of progression of care as people need to age into different levels of care. And on the bottom here, you see some of the activities that our seniors do at our communities. So planting flowers, Yahtzee, going to baseball games. And then as you see on the right side here, this kind of like arts time is really common daily in the memory care side. We find that that's something that the folks that live in these memory care wings really enjoy, these kind of activities. So as I mentioned, independent living is very light operationally. It's basically just meal preparation and a place to live. And as the people go about their day. Assisted living, there's more staffing. You have things like meal preparation, help getting around, help bathing if needed. And then there's different activities available. And then memory care, obviously there's 24-hour assistance because of the type of need that these people have. And so this is the space that I typically play in. I typically avoid the skilled nursing side. All right, so what does investing in senior living look like? So for my purposes, there's two different ways that you could invest in senior living. There's other things like REITs that you can invest in, but that's not really something that I focus on. In fact, usually when we sell off an assisted living community here and there, we're selling it off to a REIT. But for our purposes, there's the case for investing in the development side. And so I think I could talk for the next 30 minutes about why there's a case for ground up development, or I could just share this graph here. And what it shows here is that right now we're roughly at an equilibrium in terms of the need and the amount of assisted living beds that we have available. But we see this massive shortfall of assisted living beds. And so we're going out and building these communities in markets that need assisted living beds. And what does that need look like? And so as we're selecting different markets to build these communities in, we're having market studies run all over the country. And so here's an example of a couple of different communities that we've built or in the process of building. Up top here, Rowlett, Texas, which is a market outside of Dallas. The study said there's a need for 303 beds there. So what do? We're going to build 60. So we find these markets that have a huge need. We don't come close to meeting the need because we don't want to max it out. And then they fill up very, very quickly. Merritt Island, Florida, which is one that I showed earlier, they needed 465 beds. We built 65. We're already at about 62% occupied. The community's only been open for a few months. And so this is typically the type of thing that we see on these studies almost every time. These markets need assisted living beds. They fill up very quickly. And that makes this a very like predictable kind of investment and a predictable experience on my side too. Here's what a typical timeline looks like. So the way that we do this is that we obviously run the study and then we acquire the land and then we permit the land. And that process can take anywhere from 3 months to 2 years in our experience. And because it can take so long, we don't put any investor capital in until we've permitted and broken ground. And in doing so, we avoid a lot of these kind of like delays that you see on the construction side of things. But the typical timeline to build and stabilize these communities is 24 to 28 months. There's a lot of different ways you can invest in this. This is just the way we structure it on the construction side. Here's an example. I don't know, I'm not going to play the video. I'll share a video afterwards if any of you would like to see it. But here's the property in Merritt Island that was under construction. We're building in Ohio and Virginia and Florida and Texas and Missouri and Illinois. But this is very typical architecture for the properties. They all roughly look the same. The roofs all look the same. The sidings all look the same, with the exception of the different colors and things like that. Here in Florida, there'll be a pool and putting greens and things like that outside. But all the properties more or less look the same. And on the other side, I mentioned you could invest in things like the ground up developments, but the other side is we have fully stabilized communities as well. And so for those of you who don't feel like investing in construction makes sense, you could also just invest in the already built and stabilized side of things, as in this Bedford picture here. But as I mentioned, there's REITs that you can invest in. I believe some of the crowdfunding platforms have assisted living communities on there. That's just not something that I really focus on, those crowdfunding platforms. And then again, the case for stabilized communities, 83% is the average senior living occupancy rate, which is well above stabilized. And so these, one of the things that I think is really interesting about assisted living is that our tenants stay on average 2 times longer than the average multifamily tenant stays. And then our margins are very wide compared with things like multifamily. So what we're typically charging is about 4 times the rent of a multifamily property in the area, but our costs are only about 2.5 times that. So it creates really wide margins, and we have very sticky tenants. And so, you know, you have a need, you have people with money that can afford to live and that need to live in these communities. They stay for a long time, and we have really wide margins on these. And so for me, like I said, people can invest via cash, ACH, check, actually not cash, wire. Don't bring me $100,000. Retirement funds like self-directed IRAs and solo 401ks, and then 1031 exchanges are the different types of funds that are able to be accommodated here. Like I said, this is going to be short and sweet. You know, there's a lot of information online. I didn't want to feel like I was just pulling, you know, pages and pages off of here. I've always felt that, you know, a short slide deck to the point is more helpful. And if you want to schedule a call with me and get into nitty gritty details, talk about like labor costs, where they were, where they are now, you know, what construction loans are the rates are coming in at, things like that. I'm happy to go into that level of detail with you, but I thought just a high level of information here would be really helpful. You have my number there. You have my email, ryan@1031smart.com. And with that, you know, if there's any questions, I'm happy to answer anything.
Yeah, thank you for that, Ryan. No, this was a little bit of a pivot of what we thought, or what we'd started this out to be. Ryan's actually going to come back. I don't want to put you on the spot, but we're going to try to book something next week to have him come back and talk about his deals specifically. But we wanted to at least breach the subject of assisted living and teach the group a little bit more about that. So treating this more as a lunch and learn today. But if there are any questions about the asset class, about Ryan's company, what they're doing, those kind of things, now's a great time to ask while we've got his attention. We did have one question come in from Daniel. Average versus median net worth. What do you see that kind of swag, do you think? I don't know if you have those stats with you.
Yeah, so typically when we run these market studies, we're seeing the median net worth is coming in closer to like $400,000 to $500,000. And when we're building these, and I don't know how everybody does their business, but when we build them and when we allow a tenant to move in, they have to show us that they have 2 years of liquid capital liquid funds in order to move in. 2 years is the average time that folks stay. They have to prove to us that they have 2 years of liquid funds ready to move in.
Gotcha. Okay.
So the median net worth is less for sure.
Okay. And then how's that difference going into the prospectus for you? How do you bake that in when you're putting together the deal information and so forth for the limited partner to read?
So it's all in the PPM. Folks can read through that. I always share the market study so everyone can read that. The market study is like 30 pages of stuff that's good to read if you're having a hard time falling asleep. But there's always some really valuable nuggets in there and things that are always really interesting to me. And I've looked at the ones where we say, no, we're not going to build a community there versus the ones where we say, yeah, we're going to build a community there. And I think those are interesting too. Yeah, I don't know how else to answer that question.
Yeah, no, that's fair. Next one was, could you speak about your track record and your partner's track records? What's that been like to help out?
Yeah, so my experience with Shahid and his company goes back over the last 3 years and 3.5 years now. And my experience working with him is when he says, these are going to be your returns, these are the returns. I've not seen him miss a distribution. I've not seen him be short on a distribution. Now, I have raised money for other assisted living deals outside of this particular partner, where things like occupancy rates drive down for a variety of reasons, where things like Medicare are late to pay, or they're not paying enough. We only accept private pay at our communities, and that's something that I look for in an operator now when I partner with him. I don't want to rely on government payers and things like that. So my experience with this operator is that he's paid on time every time as projected. My experience with other operators is more of hit and miss. And Shahid's track record over the last 13 years is a track record of hitting his payments every time as projected. And so that's one of the reasons that I really kind of narrowly focused down on him in this space. Like I said earlier, I'm seeing a lot of multifamily operators shift over into assisted living because they see the opportunity. And there's no doubt there's an opportunity there. However, there's a huge operational difference between multifamily and assisted living. And I'm a little concerned that people are seeing the opportunity. They're saying, I can't get a multifamily deal under contract right now that pencils out. I'll just go into this, which makes more sense. And I'll figure it out when I get in there. And they're kind of like a blind leading the blind situation that I'm a little concerned about. And there's no doubt that there's a tremendous amount of upside. I know how much Shahid makes from being the operator and developer on these. And there's no doubt that if I was somebody who wanted to do that, I could make more money doing that. But my goal isn't just to, obviously making money is great, but my goal isn't to maximize what I can make. My goal is to provide investors with a good experience and have a comfortable life for myself as well.
No, makes sense. Next question was about kind of your deal structure. David had asked about, when stabilized investment does it produce quarterly, annually cash flow? Is it longer term investment? And you spoke about several different types of asset classes in the greater umbrella. Do those structure differently depending on, and are you typically offering those different asset classes underneath the umbrella to your investors and so forth?
Yeah. So when somebody invests in one of these deals, it's an individual deal. It's not a portfolio of properties. Right. It's not blended or anything like that. It's an individual deal. So like the last one that I did was a stabilized property that provided quarterly distributions of 4% a quarter. Now, at the end of the 3-year term, there's no upside. There's nothing else. It's just really strong cash flow. And like I said, it's every quarter versus what this one that I'll talk about next week, hopefully, is a construction deal. And so obviously there's no distributions throughout. There's nothing monthly. There's nothing quarterly. It's all paid out at the end of the term. So at the end of the let's just say it takes exactly 24 months. At the end of 24 months, you get your initial capital back plus 21% annualized. So that looks like a 42% return over 2 years.
Gotcha.
They are structured differently.
So I was going to say it's pref. Very specific.
It's all pref as well. So it's debt and then investors, and then Shahid takes all of the upside. And I've asked him over and over again, can you lower our returns and give us some of that upside? And he's like, I don't need you. You're not getting any of the upside. Okay.
Well, there's transparency, I guess, right? Your hold terms then, depending on which asset class underneath that umbrella, the max is 3 years. Is that what I'm hearing? Maybe down to 2?
So it's interesting. We're pretty flexible for folks that want to stay on longer, because Shahid ultimately sells these properties off to REITs. And so when he does that, he gives investors the opportunity to say, hey, if you like the returns, I can just shift your capital into another one of my properties and you can keep accruing the same returns. On the construction side of things, he refinances investors out and then gives them the opportunity to then do a 1031 exchange into one of his cash flowing properties. So what that would look like is, let's say you invested $100K into a construction deal. At the end of 2 years, you have $142,000. He would say, you can take that $142,000 if you would like and exchange it into one of my cash flowing properties and then accrue returns every quarter on that $142,000.
Gotcha.
Pretty flexible operator.
Yeah. Gotcha. What's the geography that you mentioned a couple like Texas and I forget the other. What is it? Sunbelt? Is that kind of what you go for, or what's the geography?
So Shahid's based in outside of Detroit, Michigan.
Okay.
And so he started in Michigan. So he's got a lot of communities in Michigan. We've got a few under construction in Virginia. We've got a few under construction and open in Florida, a few under construction in Texas, a few under construction in Missouri, a few under construction in Illinois. And so he has a plan to continue expanding out. And just to share my conversations with him is that his 10 to 12 year plan is to build up a large portfolio and then sell it off to a REIT all at once and then be done working. And so that's his business plan. And so we'll continue expanding into new states when the time comes. But this upcoming opportunity that we'll talk about next week is in Texas, outside of Dallas.
Okay. Very good. Another question that popped up here. What is the source data for the graph that you showed, the senior housing market trends graph that you showed? You know where that data came from?
Yeah, just a second. Would it be possible because I pulled that off of a huge deck that we use for educational purposes when we do big webinars for that investor? Would it be possible for you to just email me that question and I'll send you the full deck and you can see the source data and a very much more in-depth webinar than what I put on here? Is that okay?
Yeah, no, I think that's fine. If you don't mind, maybe flash up your contact information again here.
Yeah.
Share that again. And that way they have it here a little more recently. Oh, there you go. But outside of that, I'll just kind of pose it out there again. Any other questions for Ryan about the asset class or company and so forth as well? While we got him on the phone, we may just be short and sweet. But
that's my general belief when it comes to webinars. There's no need to show off how much you know.
Well, you just shared your information. By all means, as people see this, or those that are on live today, feel free to reach out to Ryan directly with questions that you have. But we'll try to get Ryan back on. I think next week looks pretty open to be able to get you back in. So we'll have Ryan back in next week and talk about the deal that is open in Texas, that he can share some more details on that so we can go into a deeper dive on it. But we at least wanted to get some educational information out there about the asset class this week. Have some chatter about it on our forum this week and go into the details of the deal next week then instead. So cool. Yeah. Looks like maybe that's it for today then. Right. So Ryan, appreciate your time and coming on today, sharing the information. Good stuff. Very interesting.
Thanks, Chad.
Absolutely. We'll talk to you soon. Thank you. Bye.